Hi, I'm Tom Kopus with Pring Capital Group, and welcome to our very first version of a video client newsletter. We're always seeking better ways to communicate more effectively with you. So sit back, relax, and enjoy this video newsletter. Welcome to the Pring October 2010 client newsletter. It's entitled A Great Feeling. And it is indeed a great feeling because congratulations, Pring clients. Not only did you sidestep much of the 2007-2009 financial panic and the worst stock market decline in a generation, but you also just experienced one of your best quarters ever. The typical Pring portfolio, adjusting for contributions or withdrawals, climbed to a new all-time high valuation. Your patience and confidence, coupled with Pring careful risk management and proactive asset allocation changes, combined to achieve these new highs. As you glance at the table of performance returns over various time periods over the last 10 years, you'll see that in virtually every time period, Pring has outperformed the S&P 500, and that's including any dividends. For instance, in the one-year time frame, Pring clients are up about 16% versus the S&P up 10%. And probably more importantly, over the longer term, since January of 2000, which is a time that we consider the beginning of a new secular bear market. Secular bear markets are long-term periods where the stock market underperforms for up to 20 years. And in this most recent period, the market is down 5.5% with dividends, and Pring clients are up about 95% in the same time frame. So congratulations are in order, and it is a great feeling. One noteworthy announcement this past quarter came September 20th when the National Bureau of Economic Research, the official arbiter in business cycle turning points, finally announced that the Great Recession was officially ended in June of 2009. This announcement was not news to you or us. As you may recall, our April 2009 client newsletter, we illustrated the typical business cycle sequence and stated that the recession would likely end in the summer of 2009. In addition, we correctly forecast that the official announcement of the recession end would not come until the summer of 2010. So last month's announcement came right about on schedule, but way too late to help investors who might have waited for this all-clear announcement. Understanding the logical sequence of business cycles and their relationship to financial markets is one of our core strengths. Our bold and timely and ultimately correct portfolio actions in the face of much uncertainty, confusion, and high emotions in 2009 were key factors that once again elevated your portfolio to new all-time highs. What is next? This United States economy is alive, but it is not doing particularly well. In our last newsletter, we suggested no double-dip recession this year. We still hold this opinion. The ISM index, or Purchasing Managers Index, has dipped to 54 from a higher reading of 56 in June, although it is still above 50, which indicates growth ahead for the economy. There is an ongoing tug-of-war between the economic positives and negatives. One of the numerous problems still facing the U.S. economy is lack of job creation. Another constraint on the economy is the shell-shocked American consumer, who is still very focused on paying down debt and saving more. This combination explains the slow domestic growth scenario we foresee over the next few years. Fortunately, there are opportunities to build wealth in spite of U.S. economic negatives. On the positive side is the robust economic growth happening in other dynamic parts of the world. Today, Asia, Latin America, the Middle East, and other emerging countries are the economic locomotive pulling the rest of the world, including the United States. In fact, global output, with little American and European assistance, reached an all-time high last quarter. The world economy has made a complete recovery from the 2008-2009 slowdown and is enjoying a strong expansion, even as the U.S. struggles to regain lost jobs and production. We fully expect to see these long-term trends continue for years to come and have positioned your portfolios to benefit. How is Pring taking advantage of this durable trend of international growth outperforming a sluggish United States economy? One way is through the ownership of quality foreign companies like Canadian energy firms. or exchange-traded funds and other low-risk investments with international exposure. In addition, many of your core holdings of blue-chip, dividend-paying stocks are leadership companies with significant sales and earnings from overseas business. These U.S.-based global industry leaders will continue to benefit from worldwide growth. Lastly, emerging economies are busy building out new infrastructure that requires ever-increasing demands for the raw material, industrial tools, and engineering talent provided by many U.S. companies. For all its problems, the U.S. still leads the world in innovation and the development of cutting-edge technologies. Your investments in these global and domestic themes combine the best values, income, and growth opportunities that will further build upon your portfolio gains. We look back at the past decade with a sense of pride and accomplishment. It has been a challenge and hard work to navigate the extreme ups and downs of the financial markets. Indeed, this time period included the bursting of the technology bubble, a real estate meltdown, and 2 severe multi-year stock market declines. All in all, one of the most brutal investment environments in history. Yet through it all, Pring stayed true to its conservative investment philosophy and mission to protect and grow your wealth, no matter the environment. We are pleased to report your successful investment results. Today, Pring clients can not only say they are at all-time high levels, but they have also achieved new highs in 9 of the last 11 years. There is a very small universe of individuals and even professional investors that can make that same claim. Once again, congratulations are in order. It has been a busy time for Pring and our calendar continues to fill up. Pring Investment Research drew more international attention from various media sources. Last quarter, our research was featured on websites like MarketWatch in America and a couple of leading financial websites in Great Britain. As well, Martin was interviewed for CNBC India. In September, Martin also traveled to Singapore and Hong Kong to present Pring research to institutional investors. Martin met with representatives from the Monetary Authority of Singapore, the central bank and agent for the Singapore government. Also in early October, Martin was on the go again, sharing research at an investor conference in Cairo, Egypt. Looking ahead, Pring was invited to present our market outlook to the Silicon Valley chapter of the American Association of Individual Investors on Saturday, November 13th in Sunnyvale. The AAII is a leading nonprofit organization dedicated to investment education for its more than 150,000 members nationwide. We are very pleased to be able to share our research with this fine organization. Lastly, please mark your calendars for the late afternoon of Thursday, January 13th, 2011. That's the date we are planning our annual client event. So please join us for refreshments as we detail our 2011 market outlook. More details will follow, and we do look forward to seeing you all there.